We went from 1 trillion to 15 trillion. When you combine all that, this is going to take a lot less time. So Bitcoin's going to get to 15 trillion. It's going to happen. And I believe it's going to happen in much less time. The reason is because of artificial.
Bitcoin has surged from 35K in early 2024 to over 110K by September 2025, outperforming nearly all global assets despite doubts about its growth. While some critics still call it a risk asset, history shows that's not a weakness but its strength. Risk assets generate real wealth. As AI reshapes traditional markets and the Fed turns dovish, capital rotation from overvalued tech giants could accelerate into Bitcoin, setting up the next explosive leg higher.
Having a conversation with Sam Callahan, who I'm sure you've met, and he and I had never met before, but I've liked his research pieces that he's done with Lynn Alden, and I thought they were very, very good. So we were having a conversation, and at the very end, he just made a statement when we were talking about why it hasn't gone up. I gave my thoughts, which I'll give you, and I wrote in the article, but he made the statement that, yeah, I still think people view it as a risk asset. And when he said it, it hit me that why do people think being a risk asset is bad? The only thing you make money on in your lifetime are risk assets. That's the whole point of it. The point of the article was risk assets come and risk assets go. There are plenty of things like emerging markets are a risk asset, but if you've invested them for the last decade, you haven't made any money. China is a risk asset. It's 10-year consolidation. The only things in the US stock market that have worked have been the Mag 7. So the point of the article was really twofold. One is when you say it's a risk asset, yes, it has the highest correlation based on the work that Lynn and Sam did to global liquidity. Great. But it also is a risk asset in the fact that the way that I think about it, and the reason I said when the Mag 7 is no longer an easy investment for people, that total $15 trillion market cap is going to start to switch into something that is related to the digital economy, which those names are, and Bitcoin, which is, it's a risk asset that's connected to the digital economy in some way, regardless of what people think. And so the point was, if the Mag 7 are no longer deemed a risk asset, meaning they're not outperforming the market, then that's when I think things like Bitcoin will start to find their thing. I will end with one thing here. I do believe that I've said this repeatedly, and I've talked now to enough people. I think you and I have talked about it as well. There's a lot of people from 2022, investors or entrepreneurs, who went through a lot of trouble with the government in terms of regulations, and they lost a lot of money in terms of the rise and then the collapse. And even though Bitcoin has gone higher, the rest of the system, if you strip out Bitcoin and Ethereum, it's not good. So I think every time that there's anything, I think there's a rotation that happens. So anyone that has money in Bitcoin, I think it's been a funding thing. I saw this with the .com bubble. I really do believe there's an overhang of people within inside the industry that are entrepreneurs, that are innovators, that need to sell to finance other things. I think we're working through that. I still believe there's going to be a violent short squeeze at some point. I've been wrong on that as well, because obviously we've sat here, but I do believe we're going to go higher because now that the Fed is cutting and now that we're officially in the game of earnings are good, the economy is going to get better because of all the things that are happening with inside the AI action plan, and the Fed is going to be dovish going forward. I can't think of a better.
You're saying you're wrong, but if you go back, I think Bitcoin was sitting at 35,000, 40,000 when the ETFs got approved in January of 2024. When we hit November 1st, Bitcoin's price was $69,000. I know that because it's a ridiculous number to be sitting November 1st right before the election. Yep. We're sitting at 115-ish thousand, 110,000, whatever the number is today. And that is excellent performance compared to almost any asset in the world. It's the fact that people's expectations are so high that they say unhappiness is the difference between expectations and reality, right? And so when go back to end of last year, beginning of this year, people would talk about, hey, what prices are going to hit, whatever. I have consistently thought 150,000, mainly because everyone else was saying 250, 300, 500, a million, these huge numbers. And I was saying, every cycle just seems to be dampening that volatility. It's still up. I mean, remember, it bottomed at 16,000. If it goes to 150,000, that's not bad, right? But I do wonder if you were to say target returns, if Bitcoin's adoption by public companies and institutional investors and potentially governments actually is the signal that the target return of Bitcoin has transitioned from the hyper asymmetric thing that retail investors want to something that now is at a level that these public companies, institutions, and governments want. And therefore, that means some version or some percentage of the population that would be considered a retail investor is actually going to be disappointed moving forward, because now the institutions are going to be excited, right? They're excited about a 40%, 50% a year return.
Yep.
The retail guys want 100, 200, 500%. And if you start to compound this out, it actually means that like Bitcoin a million, it happens. It just doesn't happen in, the next cycle, right? And so to me, that's where something like the Bitcoin hurdle rate becomes really important, is because now you essentially are striking this thing and saying, hey, this thing isn't impossible to beat because it's not doing 200% a year. Mm-hmm. But if it's doing 40 or 50, yes, that's much higher than the stock market, but it's still, there's plenty of stocks that do more than that in a given year. There's plenty of other investments. So how do you think about Bitcoin transitioning, from a holder-based standpoint, but also an attractiveness into a group that just like they would actually run away if Bitcoin was going up 300% a year every year?
Yeah. So I have a different take than you, and I'm going to be stubborn in one thing. I still believe we are going to shock people in the short time, since for us to double from 100 to or 95 to 200 by the end of the year is very unlikely, at least where it is now and where the implied vol is. So probabilistically, it's not there. I've been through this cycle before of innovation, and what I mean by that for everyone listening. So Bitcoin moves faster, and technology today moves much faster than it did in the past. What the Mag 7 accomplished from 2007 to today in 15 years, people have to go look.
Breathtaking.
Yeah, I mean, you went from 1 trillion to 15 trillion when you combine all that. This is going to take a lot less time. So Bitcoin's going to get to 15 trillion. It's going to happen. And I believe it's going to happen in much less time. The reason is because of artificial intelligence. So I started doing this because I like to speak a language where AI is in the middle of the traditional finance world and Bitcoin. And I wanted to bridge those two groups together and say, you have to understand that the fuel for moving money from this side to this side is going to take AI. AI will disrupt all investments on this side, which make them less investable, and gradually people will move into Bitcoin.
So AI will disrupt the legacy system.
And
it's going to bring things into this new
more into the digital. It has to be more efficient. It has to be good. I was giving an example to someone. If you understand poker and you're at a poker table, there's I forget the famous line that Doyle Brunson said, but he basically said, if you don't know who the sucker is at the table, you're the sucker. Mm-hmm. Okay. If you're not using AI in your business, if you have a lot of people and you're not using AI, which is the way most incumbents are, they're gradually looking to the CTO. The CTOs at every company I've ever seen think they can do anything better than any existing technology. The incumbents are going to get screwed. So they're sitting at the table and they're good poker players today, but they're not using AI the same way that the smaller kids are doing. And when they get at the table, and once everyone at the table has AI and you don't, you are the sucker at the table. That will happen slowly because the adoption takes time. AI agents are coming. They're coming quickly. And as they come quickly, more and more decisions will be made by computers and less by humans. That's what Bitcoin needs. Because Bitcoin this year, we're talking about it like it's not doing well. It's outperformed the S&P. The only thing it hasn't outperformed this year is gold. That's it. And then some of the foreign markets, but it's outperformed them by a lot. So I think as people kind of get used to this, at some point, just like the Mag 7, this will go parabolic. And I think everything today is happening in about 1/10 the time. So if it took 15 years to go from 1 trillion to 15 trillion with the Mag 7, I'm not saying it's going to happen in 1/10 the time, meaning 1.5 years. But I do believe that people are going to be shocked in this move higher. And the time where this happens is when vol collapses in my history. So Bitcoin saying it's going to double in a year was a very low probability event with the vol at 40. I'm a Black-Scholes guy. It's where I spent my life. The probability of what I was saying was less than 2% at the beginning of the year. I still think this stuff is going to happen.